quarterly reporting season hits top gear in the USA in the coming week, and financial stocks will be front and centre, not least because share prices of banks in particular are on a tear worldwide. The S&P Global 1200 Banks Index sits at a new all-time high, as does America's S&P 500 Banks benchmark. In this context, the third quarter results on the 14th of October from American megabank JPMorgan Chase should be a good test to see if any of those positive trends could change. The bank is America's largest by assets at $3.8 trillion, according to the US Federal Reserve, and also by stock market capitalization. As I sit here, it's also the world's 10th biggest company by stock market value. Analysts will start by looking toward the headline earnings figures, where the current analyst consensus for earnings per share, or EPS, is $4.78, and that's up from $4.37 a year ago. That equates to net income of $13.2 billion against $12.5 billion a year ago. Then, analysts will dig deeper into the figures to spot trends which could shape future earnings, namely loan and deposit growth, both of which have accelerated this year. Net loan losses, which have picked up, but not alarmingly so, to run at $2.5 to $3 billion a quarter. Any marked increases there could be seen as a warning sign, however, for the wider US economy. And also, thirdly, the net interest margin on the loan book, which seems to have broadly peaked at around 2%, but has also shown recent resilience, as has indeed net interest income in the $23 to $24 billion a quarter range. Then also the cost-to-income ratio, where boss Jamie Dimon clearly runs a tight ship, as evidenced by the second quarter's 53% outturn. After that lot, the final point of interest will be the dividend and share buybacks, which ran at $1.40 a share and $7.5 billion respectively in each of the past 2 quarters. On the domestic front, house builder Bellway's full-year results, also on Tuesday the 14th, should be worth a read, although perhaps more for the forward-looking statement and the outline of a new capital allocation policy, given the detailed nature of the company's August trading statement, which spilled rather a lot of beans. Of particular note will be the forward order book, £1.5 billion at the last count, and the trend in sales per outlet per week. Bellway has already noticed an improvement here to 0.57 from 0.51 for the whole year to June, so any colour on how the new financial year started will be important, particularly as peer Taylor Wimpey has suggested the market's cooled a little bit as consumers await November's budget. This also may help to explain the recent slide in Bellway shares, which are down by around a fifth over the past year. Analysts will also see if Bellway sticks to its prior forecast of a 5% increase in completions in the year to June 2026. That will take the total to around 9,000, up from the 8,749 total recorded in the financial year just ended. In terms of the headline numbers, by the way, analysts are looking for the year to June 25, sales are £2.8 billion, up from £2.4 billion, with £3 billion penciled in for the year just begun. Pre-tax profit of £276 million, up from £184 million, with £313 million expected in the coming year, although do watch out for any impact from any new cladding remediation provisions or the impact of the Building Safety Act. Those figures then take us to cash returns to investors. Bellway cut its dividend in the year to June 2024 and has previously run little by way of share buybacks. However, management has hinted at a review of how cash is allocated, and we will learn more alongside these results. Finally, we come to Premier Inn owner Whitbread, which is due to release first half results to the end of August on Thursday the 16th of October. June's first quarter trading update was nothing flash, as total accommodation sales in the UK fell 2% year on year, hampered by a 2% drop in RevPAR, or revenue per available room. The fledgling German operation did show growth of 16% and 12% on those metrics, however, and analysts' reports suggest bookings and pricing have started to improve over the summer in the UK. The recent rally in the share price suggests someone expects something by way of good news from these interim results, where much attention will also focus on the well-trailered revaluation of the group's hotel estate and assets on its balance sheet. The benchmarks from a year ago for the headline figures are sales of £1.6 billion, and for this full year the current consensus is looking for a 2% drop to £2.85 billion. Pre-tax income of £309 million, and for this year analysts expect £465 million, up from last year's £368 million, which did however include a £116 million one-off impairment cost. And finally a dividend of 36.4p, Analysts expect a small increase in the full-year figure and note that Whitbread continues to run a £250 million share buyback programme. Thank you for watching. I hope that you and your families are all keeping well, and I look forward to seeing you again next time.